You know what kept me awake more nights than any market crash? It wasn't losing a fortune. I did that more than once. It wasn't the strain of holding positions worth millions back when millions truly meant something. It wasn't even the wolves of Wall Street waiting for me to stumble. What haunted me, what burned inside me like acid was fear itself, that invisible presence whispering in your ear the moment you need to act, that cold grip tightening around your chest when action is required. And it took me decades and several fortunes to understand this. Fear in trading is not your enemy. Your relationship with fear is. Listen carefully. I'm Jesse Livermore. They called me the Boy Plunger, the great bear of Wall Street. I made and lost three fortunes before most men earned their first. In 1907, I shorted the market and walked away with $3 million while grown men wept in the streets. In 1929, I made $100 million as the world collapsed. But what no one tells you is that between those legendary victories were countless moments when fear nearly destroyed me. Moments when I stood frozen as opportunity slipped through my fingers. Moments when I acted too early because fear disguised itself as urgency. Moments when I held too long because fear masqueraded as hope. Let me take you into the truth, not the legend. If you're sitting there now, staring at your screen with a knot in your stomach, convinced you're about to lose everything, feeling like everyone else knows something you don't. I've been there. At 14, writing prices on a chalkboard in a bucket shop. At 30, holding the largest short position in history. At 50, broke and starting over, and the one truth I discovered, the one that transcends every market, every era, every instrument, is this. Fear is not the problem. Ignorance is. You want to know how I conquered fear? I didn't eliminate it. I educated it. I transformed it. I made it serve me instead of rule me. And I'll tell you exactly how not, with empty motivation, but with lessons that cost me millions to learn. Here's what no book or seminar teaches you. Fear in trading comes from one source: uncertainty. When you don't know what will happen, you're afraid. When you don't understand what the market is signaling, you're afraid. When you risk money you cannot afford to lose, you're paralyzed. But here is the brutal truth. The market is always uncertain. You will never know with absolute certainty what happens next. Never. And when you truly accept, that deeply accept, everything changes. My first real lesson in fear came in my teens at a Boston bucket shop. I had saved $5 fortune to me and placed it on Burlington. I had studied that stock for weeks. I knew its rhythm. It was going higher. I felt certain. But the moment my money was at risk, my hands shook. My breathing tightened. That $5 represented survival. I was terrified. So I closed the trade at the first sign of profit. I made 50 cents and fled. Burlington went on to move exactly as I had predicted. I could have doubled my money. Fear made me small. Fear made me foolish. That day, I made a vow, not to eliminate fear, but to understand it, to trace it to its source. And the source was simple. I had no rules. I had hope. Hope and fear are twins. Both are born of uncertainty. When you hope a trade works, you admit you don't truly know. When you fear it won't, you admit the same. But when you know, because you studied, observed, and understood the tape, there is nothing to hope for and nothing to fear. There is only execution. Real knowledge is not a tip or a feeling. It's not a guru's prediction. It's knowing a stock so well you can sense its rhythm. Stocks have personalities. Some are volatile and reactive. Some move steadily and quietly. Some are manipulated, dancing to invisible strings. Until you know which type you're dealing with, you have no business risking capital. One lesson took me years to internalize. The market does not care about you. Not your bills, your dreams, your fears, or your hopes. The market is like the ocean. You don't argue with the ocean. You don't demand the tide shift because you need it to. You observe it. You respect it. You enter only when conditions favor you. The moment I stopped trying to bend the market to my will and started listening to it, fear loosened its grip. But listening is not passive. It requires study, hours watching the tape, understanding volume, recognizing accumulation and distribution, seeing the truth behind headlines. Newspapers lie. Experts lie. but the tape the raw exchange between buyers and sellers does not lie. I developed what I called key points price levels where stocks would either break through or break down. I waited for those moments with patience. No guessing, no hoping, no fear. Because when the setup appeared and confirmed my thesis, I wasn't gambling. I was executing. An execution based on knowledge leaves no room for fear. Most traders enter and immediately begin doubting. Every small move against them feels catastrophic. Every pause feels like reversal. They flinch at every tick because they entered without conviction on a tip, a hunch, a hope. But when you've done the work, identified your key point, defined your risk in advance, determined exactly where you're wrong, there's nothing to fear. The market either confirms your thesis or it doesn't. You either win or you lose. But you are not paralyzed. You are observing the result of a decision. This realization changed everything for me. I stopped treating trades as life or death events and began treating them as experiments. My hypothesis: this stock will move to this level for these reasons. My test: enter with predefined risk. My result: confirmation or invalidation. If confirmed, I added and let profits run. If invalidated, I exited and studied the error. No drama, no attachment, just information. Do you see what that does to fear? It removes its nourishment. Fear feeds on uncertainty and consequence. But when risk is defined in advance, when you know exactly what you are willing to lose, the consequence is contained. You are not gambling your future. You are conducting a measured experiment. You're not gambling your future. You're allocating a defined portion of capital to test a hypothesis. If you lose that amount, it hurts, but it doesn't destroy you. And if you win, you're positioned to win substantially. This is where most traders fail disastrously. They risk too much on trades they understand too little. Afraid of missing out, they enter with position sizes so large that fear controls them from the moment they click buy. They've already lost before price even moves. Fear forces them to exit at the worst possible moment. It makes them hold when they should sell, and sell when they should hold. Trade by trade, fear drains their accounts until they're bitter, blaming manipulation, blaming the market, blaming everything except the truth. They never learn to trade with knowledge, so they never learn to trade without fear, and understand this fear isn't always obvious. Sometimes it wears a disguise. Sometimes it looks like confidence. I've seen traders, and I've been this trader, jump aggressively into positions, speaking boldly, appearing fearless. But beneath that bravado is terror. That terror turns into recklessness. They take enormous risks because they're afraid of being insignificant, afraid of being ordinary, afraid that if they don't hit a home run, they are nothing. So they swing at every pitch and strike out again and again. That isn't courage. That's fear behind a mask. True courage is waiting. True courage is patience. True courage is passing on 100 mediocre setups to take the one exceptional opportunity. The market rewards patience more than almost anything else, but patience demands something rare: self-knowledge. You must understand yourself better than you understand any stock. What makes you impulsive? What makes you hesitate? When are you at your sharpest? When are you most vulnerable to mistakes? What emotional states lead you into bad decisions? Until you answer these questions honestly, brutally, honestly, you are trading blind. And trading blind leads directly to fear and ruin. I kept what I called a trading diary, not poetry about the market facts. Every entry, every exit. But more importantly, I recorded my state of mind. Was I rested? Had I been drinking? Was I distracted? Was I trading from opportunity or boredom? From patience or the need to recover losses? The patterns were both painful and enlightening. I realized that nearly all my losses came from violating my own rules, not from the market outmaneuvering me. I outmaneuvered myself. Impatience overrode analysis. Fear of missing out pushed me into weak setups. The sting of a loss drove me into revenge trades. Every catastrophic loss I ever suffered, and there were many, traced back to emotional trading, to fear in one of its many forms. So I created a system not only for analyzing stocks, but for analyzing myself. Before any trade, I asked, Does this setup meet all my criteria? Have I clearly identified my key point? Do I know precisely where I am wrong? Am I risking an amount I can lose without affecting my judgment? Am I acting from patience or desperation? If I couldn't answer those questions correctly, I didn't trade. It didn't matter how promising it looked. It didn't matter if others were profiting. I did not trade. The result? Fewer trades, far fewer but dramatically higher quality. I took only the best opportunities, only when conditions strongly favored me. And when you operate with that discipline, something remarkable happens. Fear fades. Not because you win every time you won't, but because you are in control. Decisions come from structure and knowledge, not impulse. And control is fear's antidote. Consider 1907. I saw the panic forming. I watched the manipulation, the overextension, the leverage stacking like dry timber waiting for a spark. I knew a collapse was coming, not guessed, knew. So I built the largest short position of my career. Was I afraid? Absolutely. I was betting against powerful men and public optimism. I woke each morning aware that a coordinated rally could crush me. The pressure was immense. But here's the difference. My fear wasn't rooted in doubt about my analysis. The tape, the fundamentals, the psychology all aligned. My fear was about endurance, not uncertainty. Could I withstand the pressure long enough for the market to prove me right? That kind of fear is manageable. I managed my positions like a general manages troops. I kept reserves. I avoided overextension. I calculated worst-case scenarios and ensured I could survive them. When the panic finally erupted and fortunes vanished overnight, I was prepared. I covered my shorts at enormous profit, not because I was superior, but because I prepared for what others refused to consider. Preparation weakens fear. When you've stress-tested every scenario, when you've ensured survival, even in the worst case, fear loses its dominance. You're not hoping. You're executing a plan designed for reality, including its harshest possibilities. Now let me tell you about the opposite. After 1907, success made me careless. I believed I had mastered the market. I traded without sufficient preparation. I listened to others instead of the tape, and I lost everything. Success bred complacency. I stopped respecting the market. I stopped respecting fear as a signal that I hadn't done my homework. Because that is what fear truly is: information. When you feel fear before a trade, your subconscious is warning you. Perhaps the position is too large. Perhaps your exit isn't defined. Perhaps you're trading emotion instead of analysis. Perhaps you don't fully understand what you're trading. The worst response is to suppress fear with bravado. The wise response is to question it. What exactly am I afraid of? Is this fear rational? If it is, what preparation have I skipped? What information am I missing? I learned to value fear. It became my advisor. When fear surfaced, I slowed down and examined its source. And more often than not, I discovered flaws in my thesis that required correction. I discovered assumptions I had never tested and risks I had never properly measured. By confronting those issues before entering a trade, I turned fear into confidence, real confidence. Not the false confidence that comes from ignorance, but the kind earned through serious preparation. Here's another crucial realization. Fear multiplies in isolation. When you're alone with your thoughts, staring at a losing position, it grows like a disease. It whispers worst-case scenarios, magnifies every negative possibility, and freezes you. But when you operate with a system, with rules, with a defined plan, you are never alone. Your methodology guides you. The key decisions were already made calmly and rationally when you built your system. Now you simply execute. That is why I became obsessed with creating trading rules, not loose guidelines, but strict, inviolable principles I would follow no matter what. The most important rule I ever formed was simple: never let a profit turn into a loss. It sounds basic, but it is extraordinarily powerful. Once a trade moves into profit, I shift my stop to break even. At that point, the risk is removed. The fear of loss fades because the downside has been neutralized. I can allow the trade to develop without constant anxiety. I can give it space. I can let profits run without fear forcing me out too early. Another rule: never add to a losing position. Never average down. If you are losing, you are wrong. The market is signaling that your analysis was flawed. Accept it. Take the small loss. Protect your capital. Wait for the next opportunity. Many traders, including myself early in my career, become stubborn. They double down on losing trades, convincing themselves the market is wrong and they are right. That is not trading. That is ego. And ego, combined with fear, is a toxic mix that destroys accounts every time. I also learned to cut losses quickly and let profits run slowly. Fear pushes you to do the opposite. It makes you take profits too soon because you fear they will vanish. It makes you hold losses too long because you fear admitting you were wrong. But trading mathematics are unforgiving. If you risk $1 to make $1, you must win more than half the time just to break even. If you risk $1 to make $3, you only need to win 25% of the time to be profitable. The math is simple and ruthless. So how do you hold a winning trade when fear urges you to close it? You use trailing stops. You let the market signal when the move has ended. You do not impose fear-based judgment on price action. When I'm in a profitable trade moving in my favor, I monitor the same signals that justified the entry. As long as those signals remain intact, volume supporting the move, price action staying healthy, no reversal patterns forming, I stay in. I may secure partial profits along the way, but I allow the core position to continue. The largest gains do not come from the initial move. They come from continuation, from when a good trade becomes a great one and a great one becomes exceptional. But you can only capture those exceptional trades if you can endure pullbacks without panic, if you can watch temporary profits shrink without closing in fear. The only way to do that is to have a system that distinguishes between a pullback and a true reversal, between healthy consolidation and a trend chain. This demands study, experience, and exposure to thousands of charts and hundreds of trades. There is no shortcut. Anyone claiming there is an easy, fear-free way to trade is selling you something. The only path to trading without fear is becoming so prepared and systematic that fear has no anchor. That takes time, effort, losses, and painful lessons. Every chart you study, every trade you review, every mistake you analyze builds the foundation that will eventually loosen fear's grip. My greatest trade was not 1907 or 1929. It was in 1915, after I had gone broke again and was starting over. I identified a perfect setup in Baldwin Locomotive. Everything aligned. The pivotal point was clear. Volume was building. The tape confirmed it. I had almost no capital, but I gathered every dollar I could and entered the trade. It unfolded exactly as anticipated. I held through frightening pullbacks and moments where I could have taken respectable profits and left. I held because my system said to hold. Over 6 months, that single trade rebuilt my capital and restored my fortune, not through luck, but because I trusted preparation more than fear. That trade taught me something profound. Fear and faith are not opposites, ignorance and knowledge are. Fear and faith are both responses to uncertainty, and they can exist together. I felt fear every day during that trade, but I also had faith in my system, my preparation, and my ability to read the tape. Faith did not erase fear, it directed it. Fear kept me alert and attentive. It prevented complacency, but faith stopped me from reacting irrationally. This balance is essential. Maintain healthy fear, the kind that keeps you cautious, disciplined, and respectful of the market, but cultivate unwavering faith in your methodology. That faith only comes through testing, repetition, and proof across dozens and then hundreds of trades. When you see that following your rules leads to long-term gains and breaking them leads to losses, you build evidence. That evidence becomes conviction. No one tells you this about trading success. You will never eliminate fear completely. Even after decades, even after substantial wealth, even after becoming respected, fear remains. I felt it before every major trade. But it changes. It evolves from chaotic panic into controlled tension, from confusion to awareness that the stakes are real. That refined fear is acceptable. It sharpens you. What you eliminate is not fear itself, but its control. You remove the fear that freezes you, that drives irrational decisions, that tempts you to break your rules. and you do that through one method alone: knowledge converted into disciplined, systematic action. Let me be clear. I failed more than I succeeded. On individual trades, I lost more often than I won, but I won big and lost small. That is the entire game. You do not need a high win rate. You need your average winner to be significantly larger than your average loser. Achieving that requires going against human instinct. You must become comfortable being wrong. The fear of being wrong destroys more traders than the fear of losing money. When you fear being wrong, you hold losing trades hoping to avoid admitting a mistake, and you exit winning trades too early just to secure being right. Both behaviors destroy profitability. Both ensure long-term failure. Both behaviors are rooted in ego protecting itself from the discomfort of being wrong. I had to eliminate my ego. I had to remove the part of me that needed to be right. I had to become comfortable saying, I was wrong. The market proved it. I'm out. No shame, no anger, no revenge trading, just acceptance and analysis. What did I overlook? Which signal did I misinterpret? What lesson is here? Then move on to the next trade with a clear mind. The moment you can take a loss without it disturbing your emotional balance, you neutralize fear's strongest weapon. Now, about 1929, everyone asks about it, and that trade reflects everything I've shared. By then, I had built and lost fortunes several times. I was older and more experienced, and I recognized the same patterns from 1907, only amplified. Speculation was extreme. Everyone was invested. Even shoe shiners were offering stock tips. Money was layered on borrowed money. Fundamentals were meaningless. Prices were detached from real business value. And the tape showed distribution. Large operators were quietly selling while the public eagerly bought. I went heavily short. The criticism was relentless. Experts mocked me. Newspapers attacked me. Other traders declared I was finished. Meanwhile, the market kept rising. My unrealized losses increased. The fear during that time was intense. Not fear of being wrong, but fear of being right too early. Fear that I would be forced to cover at a loss before the crash arrived. Fear that I wouldn't endure long enough to see it unfold. It is a unique strain of pressure to believe you are correct while your capital drains away. But I held. I held because my analysis remained valid. I held because distribution was still visible beneath the surface. I held because I had prepared for that exact scenario. My positions were sized to withstand significant adverse movement. I had reserves. I had calculated worst-case outcomes. When the crash finally came, one of the most dramatic collapses in American history, I was positioned to profit enormously. The gains were extraordinary for 1929. It made me one of the wealthiest men in the country. Yet that trade did not make me a better trader. The years of discipline that prepared me for it did. The commitment to building and following a system. The strength to stand against the crowd. The emotional control to endure adversity. The wisdom to size positions correctly. All of it was forged through years of smaller trades, modest wins, painful losses, constant study, and relentless self-improvement. You cannot skip the foundation. You cannot jump straight to the legendary trade. You must invest the hours. Study charts until patterns become obvious. Watch the tape until you sense the market's rhythm. Trade. Small until your results confirm you have an edge. Lose enough times that losses no longer devastate you. Win enough times to trust your process. This takes years, not weeks, not months. And most quit long before mastery because they want outcomes without education, profits without discomfort. The market shows no mercy to that mindset. So where do you begin? With honest self-assessment. Are you trading a proven system or guessing? Do you document every trade or operate without records? Are you risking money you can afford to lose or trading with fear? Do you follow defined rules or improvise constantly? Do you study daily or chase tips? Answer honestly. If you're unprepared, stop trading real money. Return to simulation. Return to study. Build your system. Every dollar lost through ignorance could have funded your education instead. I have seen traders destroy accounts repeatedly, each time hoping for a different outcome while changing nothing about their approach. That is not trading, that is repetition of mistakes. Define your rules, write them clearly, not vague intentions like cut losses quickly, but precise actions such as exiting at a defined percentage. Not let profits run, but trailing stops at a measurable level and exiting only when triggered or when your signal reverses. Make them specific, measurable, and unambiguous. Then follow them consistently, especially when emotions urge you otherwise. Track everything: entries, exits, profits, losses, and your emotional state. After a month, review the data. Identify patterns. When do you perform best? When do errors appear? What market conditions produce your strongest trades, which lead to your weakest? Refine your system accordingly. This is how knowledge replaces fear. This is how a gambler becomes a trader. The market owes you nothing. It does not care about your bills, ambitions, or urgency. It simply exists, like a river flowing by its own nature. You can learn to navigate it and move with its currents, but you cannot control or force it. Once you accept this, once you stop fighting and start observing, your relationship with fear changes. You stop trying to impose your will and instead focus on analysis and appropriate response. At 63, looking back across decades of markets, panics, and manias, I would offer one piece of advice. Respect the market's power, but respect your own power more. You control your preparation, you control your system, you control your rules, position sizing, and risk. You control whether you walk away from weak setups. You control your patience. The market has no authority over you except what you surrender through ignorance, impulsiveness, and lack of discipline. Fear is not the enemy. It is information. When it arises, do not suppress it or mask it with bravado. Examine it. What is it revealing? What knowledge is missing? What preparation was neglected? What risk remains undefined? Address those gaps, and fear shifts from obstacle to guidance. The greatest traders are not fearless. They manage fear effectively. They convert it into awareness rather than allowing it to become destructive. They build systems that function regardless of emotion. They internalize rules until discipline becomes automatic. Through extensive experience, they recognize patterns, traps, and market behavior. With that depth of understanding comes a confidence that fear cannot destabilize. This is the path, not eliminating fear, which is neither possible nor desirable, but removing its control. Transform fear from master into servant. Build knowledge so deep, preparation so thorough, and systems so resilient that when fear whispers its warnings, you listen, evaluate, and respond with discipline rather than reaction. When fear speaks, acknowledge it. Review your plan, confirm your methodology, and execute anyway, not recklessly or blindly, but with the steady confidence of someone who has prepared thoroughly, paid the price, and earned the right to act without hesitation. The market is not going anywhere. It will be there tomorrow, next year, and a decade from now. There is no rush and no competition. There is only the process of becoming, of learning, and evolving from someone ruled by fear into someone who understands it, uses it, and trades with structured confidence built on mastery. That process begins now with honesty, commitment, and the decision that fear will no longer limit your potential. Do whatever is required. Study what must be studied. Practice as long as necessary. Fail as many times as needed until you become the trader you are capable of becoming. The map has been laid out. The direction is clear. The rest is your responsibility. Will you choose the easy road and remain under fear's control? Or will you choose the difficult road and shape yourself into someone who trades with knowledge, discipline, and systematic precision? Understand this: the market rewards only those willing to work for it. And that work is demanding, more demanding than most expect. But beyond that effort lies freedom. Freedom from fear, freedom from doubt, freedom from emotional decision-making. That freedom justifies every sacrifice. It was worth it for me, and it will be worth it for you. Now study the tape. Define your rules. Test your system. Record your trades. Learn from every mistake. Remember, you are not battling the market, and you are not battling fear. You are developing into someone for whom fear is simply data. Risk is a calculation, And trading is the disciplined application of hard-earned knowledge. That individual, the master trader, is who you are becoming. One trade at a time, one lesson at a time, one victory over fear at a time. Every long journey begins with a single step. Take that step today. Your future self-confident, capable, and free from fear's control awaits you at the end of that path. Go meet him. Go become him. The market is waiting. And now, you are ready.